All right, what up, guys? It's your boy Trader Mayne here, back for another little market breakdown, technical analysis, tips and tricks video. Appreciate everyone's patience. I know it's been a couple of days since the last video here. I've been moving, as I had mentioned, and moved into the new place. Very excited, and excited to get back in the charts and the chats a little bit more, and let's all make some money. So a couple of shout outs to start off the video here. Though do not disturb here on getting blown up here. My shit's going viral, guys. My Twitter has been blowing up like crazy. I cannot believe I have 2,700 followers. We were at 900 April 6th. So, 10x low cap gem of 2018. You're watching it here, man. It's my Twitter. Just kidding. And the group as well, 280 strong. Super awesome. So, very excited for all the new people. Excited to share what I've learned and, kind of show you guys some price action stuff that I've learned, in my past 5 years of trading. And excited to work collaboratively. I know trading's not a team sport, but you can still make money together. Hanging out with the right people, talking to people who actually know what they're doing, are educated. I have no problem sharing. And on that note, shout out to a few people here in particular. Lots of help from Crypto Cred here, sitting up, helping me set up a Discord. Live right now, bro. Setting up a Discord. This group's just getting kind of unmanageable with 280 people. As you guys saw the other day, I posted that guy's message he sent to me on Telegram. He was a new Telegram follower and a new Twitter follower as well. And I mean, this just kills me, man. I don't want to see this. Saw your tweet. Got long 50x based on something I tweeted. My fucking avatar, guys, is a fucking robot bird. If you're taking financial advice and going 50x to the point where you might have to stop trading and get a job if you're wrong, you need to give your head a shake, okay? And that's part of the reason why I'm doing what I'm doing, because there's so much crap out here where guys and people online are taking advantage of guys like this, taking their money, giving them bullshit information. That's why I'm providing what I'm providing for free right now. Just trying to, expose people to see that there is good content out there. Follower account doesn't necessarily mean anything. And, just be smart, guys. I'm a fucking robot bird on the internet. Do not take everything I say with a grain of salt. Do your own research. I'm trading my money. So everything I do, I am responsible for. And as much advice as I'm giving, you should be the same way. You're responsible for what you do with your money. So enough of that stuff. Shout out to Crypto Cred. Like I said, we're gonna get on Discord. We'll give you the little sneak peek of what we got going on here. We're getting this Discord set up. I'm gonna send out the link tonight. All this stuff is gonna be free. Send out the link tonight. We're gonna have a couple of categories for people who know what's up. But I think it will be more manageable. This is getting to the point where there's so many of you in here that there's multiple hundred messages every time I come back. Not live streaming. I just record and then talking as I type. I'm on that level of intelligence here right now. And then post. This is going to be great because there's a couple things here that are read only. So this will be key for, when we have this many people in the group, when you want to come and see the charts, come and see the knowledge, things like that, you can post directly in here. And we won't have to worry about you getting lost in, all of the information. So we'll have some read-only things here, trade ideas, announcements, education. We'll post these videos in here, ICT stuff, price action stuff. We'll have some other people who I know what they're talking about. Again, shout out to Cred. And then we'll still have the chats and the chart ideas and the shared channels. I still want to be able to communicate with you guys. I definitely don't want it to seem like I'm growing too big to not, stay in touch and, be able to ask questions to. I've been in these crazy big groups before, where you can't actually talk to the person. Like this one here, this is Actual Advice BTC's room. I mean, this is a shit show. I don't even know if he posts in here. Not a lot of trade talk going on, a lot of shit posting, and I'm worried that, I don't want that to become here. I want to remain available, but I want to be posting, useful content. Speaking of useful content, I've joined the Dog Pound recently. Shout out to the Crypto Dog for sending me an invite. Lots of smart guys in here. Tons of smart guys, tons of great content in here. Definitely suggest you give them a follow. They have, sorry guys, I shouldn't say I'm going live. I don't know how to live stream. I guess maybe on Twitch. I'm still getting used to this thing, so any advice would be great. If you guys want me to live stream so you can ask live questions, maybe we can make that a thing. But yeah, follow the Dog Pound. They have a public chat as well with great content in it. This Discord is awesome. There's a lot of smart people in here. Trading great ideas, and I've been posting in here a bunch lately. So check it out. I'll be posting everything I'm posting in here. I'm posting for you guys as well, so don't worry. But like I said, lots of great content in here. Shout out to Crypto Dog for inviting me. Always happy to make connections, with other like-minded people who want to just help people. There's so much money. We're so early in this space. There's so much money to go around. There's no need to be, leading anyone astray. There's enough to go around. That's why guys like him, guys like Cred, who are, doing this shit and just giving away money essentially with their financial advice. Or not financial advice, but their tips, excuse me. I respect that a lot. So I'm very happy to be part of the Dog Pound and be, posting some stuff in there. Anyways, let's get to the charts. Enough of my blabbering. I'm going to try my best to make this not a super long video. So what we'll do is we'll go over BTC, these moves that we've seen over the last couple of days. We're going to go over some Twitter stuff. I know you guys like that. We're going to go over some sentiment stuff. And, first, though, let's answer, yes, it does. It means I am technically challenged. Let's start with the questions in here. I asked you guys to do hashtag question. So let's see how well this works. Hashtag question. What about questions? 1 of 4. Okay. I feel like there's more than 26, but we'll see. All right, hashtag question 1. The Yoda indicator. All right, so saw this posted by our boy Crypto Yoda, one of our favorite contra indicators on Twitter. So if you've been watching my videos, you know what I mean by now about this. These talking heads online who post tweets that can never be wrong. There's no defined decision. There's no defined direction. They're not calling a trade. They're not calling a level. They're just posting shit where kind of regardless of what happens, they're going to look good. They have a shitload of followers. And I find it hard to believe that this guy has 193,000 real people following him. But hey, what the fuck do I know? I mean, posted 2 hours ago, 300 likes, maybe. But guys like this, you can just tell by the quality of their content. This guy doesn't, I don't think, in my opinion, know what the fuck he's talking about. So anyways, he posted last call for Bitcoin. If you think Bitcoin is going from way down here, because it broke this trend line, all the way through all-time high, and you're not going to have a chance to get back in right now, I don't know. Fuck you, dude. You know that that's not true. This is a daily chart, and he's trying to tell you that the breakout of this diagonal trend line means we're going to soar to all-time highs. Maybe we fucking will, but the bottom line is there's going to be multiple opportunities for me to get in on a retracement and a better price than buying right here, which is effectively at point of breakout. We always know it's a terrible idea to buy the breakout, and right into a very strong weekly resistance level. So in my opinion, not very good advice, but I definitely know that a lot of people are buying and YOLOing Bitcoin based on this guy's posting this chart. The funny thing is you got to look at this a little bit deeper, right? So everyone loves these downtrend lines. Uh-oh, we're breaking out, retest, let's go. Remember the trend line before this trend line, guys? It was from up here, right? Down to this one, down to this one, right? 3 touches, right? Validates the trend line. This is retail mindset, right? 1, 2, 3, breakout, retest, right? Well, before it was 1, 2, 3, right? We had a breakout, we had a retest. Do you guys remember this move? The breakout and the retest, the break of this high, everyone was going crazy online. To me, this is my opinion, the sentiment online right now is sounding a whole lot like the sentiment sounded around here. When we false broke out, we broke this downtrend line that everyone was fucking posting, and then look what happened. We went all the way down to like 6,600. So I'm not saying that that means that this is going to happen again. I'm not saying that at all. I've posted this so many places and said this, to ad nauseum here. I don't like the terms, bullish and bearish when, you're trying to pin me to it. Saying, oh, well, I'm bullish above here. Okay, so you're bullish. We're going to 20K. It says, no, everything is relative to the time frame you're trading, the style of trading you're doing. Everything is relative to that. So on a daily time frame, I am still very much bearish. Does that mean I don't think we could break 9,000. The level I'm kind of watching is 9.2K. And start going up? Of course not. And if we do, I am nimble enough to be able to say, okay, now I'm looking for longs. All I do is I mark areas of interest where I think there's going to be institutional sponsorship on moves, smart money, the market maker, whatever the hell you want to call it. And then I wait for price to approach those levels and I look for trade setups. It's simply that easy. I don't care about direction. Forget about direction. Doesn't mean anything to me. I wait for price to approach a level and then I assess the situation. And what we'll do in this video is we'll break down some charts from bear to all marked up so you can see what I mean. But yeah, the Yoda contraindicator, maybe he's right. I don't know. It doesn't even matter. The bottom line is I guarantee if I go far enough back in this guy's charts to back here, we're going to see this exact same chart with this downtrend line drawn. Breaking, retesting, only to get fucked by the bear train. Anyway, so that's the Yoda contraindicator. Let's go to the next one here. Question, hey Trader Mayne. This is a D1 breaker because it took out the stops at 7,200. Is that right? Just reading some tweets from the BT Shot Caller guy on Twitter, and he's fully bullish above the D1 breaker. Perfect. Okay, so let's discuss this breaker. I've been using this actually to frame a lot of my trades lately, and you guys will see why as TradingView continues to hate me and delete all of my drawings. It's super annoying. I've been trying to save it. I upgraded to Pro. I don't know what the fuck to do, guys. So here we go. I am getting a little bit better at it thanks to your guys' tips, though, so thank you. It's amazing that I am so technically inept still. All right, so this day one breaker is the one he's talking about, I believe, right? Let's look at the date here. End of April. Fucking A. End of April. So yeah, right here, March 28th. Yes. So the breaker is an ICT concept, okay? And what it is it's an order block that breaks market structure and then essentially gets nuked, blown right through, going the other way. And then a retest of it often is going to be a very bullish sign. It's called, this is a bullish breaker because what it is it's an order block, so the up candle before the down move that breaks market structure. This is a swing low here. We have a order block breaking this swing low into a higher time frame block often. If you remember, I've removed this level. But if you guys remember, what level do we have down here? You remember this one? Let's just draw it. This is a tutorial, of course. Down candle before an up move. Blowing out this swing high. Eventually, this is kind of basically the last down really strong move. I mean, you could consider this one as well. before we went towards all-time high, almost up to here. Another thing to help you identify order blocks is the down candle. The next candle after it should violate the high. Violate is a dirty word. I don't know if I like that. It should break the high here. So the down candle, this up candle breaks the high. And I know you guys are going to come at me with all these questions trying to pin exactly what an order block is every time. Again, this is something you have to get in the charts and practice with and learn yourself. It's the only way to really master it. But there are some rules, but again, I could have just marked the body here. It works the same. That's where the majority of the trading volume is. In this case, I wanted the whole candle because this is, to me, 5,400, a very clean low, essentially, with this kind of whole consolidation right here. So to me, there would be a lot of liquidity on the long side under here. But we'll get in that later in the video. I know there's a question about that somewhere in the chat. So anyways, we draw this one out, remember. And this was the trade we talked about in the last video that we posted about well in advance. But the reason I'm drawing it here is because we have this bullish breaker, because it is the up candle before the down move. This down move breaks the low of this candle, just like this up move breaks the high of this order block candle. I'm on my laptop right now, so I apologize if I'm kind of finicky with the movement here. I'm on a trackpad. Still haven't unpacked fully here, guys. Anyway, so the breaker, the difference between a breaker and an order block is simple. If this was this block here, if this just rejected price here and price came back down, this would be a bearish order block, daily order block. But since price nuked through this and didn't respect it at all, this candle completely nuked through this order block, it becomes what's called a bullish breaker. And that is an order block that breaks a swing low in the opposite direction of the actual move. So it's a bullish breaker because it's breaking a swing low, which would obviously make you think it's going down. And then when price comes back through it, it blows through it. And then the idea is that the retest is going to be a strong bullish move. And that's exactly what has happened here. Everyone is saying, there's not enough volatility. We're range bound. It's like, I don't know what chart you're looking at, but to me, this is literally a span of 1 week. And we have had, some significant, very easy tradable ranges here from up into this zone, down into this zone, up into this zone, and I suspect probably another retest down into here. And these levels have been posted on my charts, on Twitter. I've been posting these things everywhere. You could almost just buy and sell these levels and be right most of the time. I'm not suggesting that's what you do. Again, not financial advice. But what I'm saying is when you frame your trades on predefined levels, it becomes a whole lot easier because you know what you're looking for. I'm not trying to, people were asking me, they're saying, what is the white area? Is that what you don't know what's going on? It says no. I mean, you got to have a strategy in mind while you're trading. You need to know, okay, if I'm entering a trade, I'm not just looking at the 15-minute chart and seeing a swing high break and entering long. You need to have this thing framed. You need to be looking at the daily chart and saying, okay, well, what is the overall directional bias on the daily? And then you need to go down to the 4-hour chart. You need to start marking out your order blocks and your areas of interest, your liquidity pools. And then you need to be going on the 1-hour block and doing the same thing. And then you need to be going on the 15-minute chart and framing your entry based on that. All the smaller time frames are used is to know when the market structure is breaking sooner. The market, if this swing high is going to break on the daily, I am going to see bullish market structure sooner than that on the 4-hour, even sooner on the 1-hour, even sooner on the 15-minute. That's what fractal price means. People who are saying, okay, fractals are these repeating patterns, that's not. I mean, yes, that's like a fractal in nature, the Fibonacci, spiral, getting all Kazanomics on you here. The Fibonacci stuff, seeing those patterns repeat in nature, the shape of our galaxy is the same as, neurons in the brain, whatever. Those are fractals, sure. Those crazy drawings and images you see. But what I mean when I say price is fractal, at least, and, from what I've learned in how it relates to price action, is that this daily candle is made up of several 4-hour candles. And what you're going to see is patterns that are occurring on the 15-minute will be occurring on the daily as well. And that you can notice these things sooner on the lower time frame. And how that, I know this sounds confusing, but the way it works is if I'm expecting a continuation of this daily trend to break this high, am I just going to buy the breakout on the daily? No, I'm going to be entering on a smaller time frame looking for, okay, so here's that daily candle here that we're looking to break high. See how much more detail we have on the 1 hour, right? Here's a swing high on the 1 hour. That's been broken, right? That's what you want to be looking for. The swing highs, the bullish market structure change, higher highs, higher lows is happening on a lower time frame before you see the actual break of this high, on the daily. So you want to be framing your trades based on how long you want to be in the trade, what time frame you're entering on. All of these things should be known before you actually enter the trade. And I posted that somewhere in the dog pound yesterday. Like, this kind of stuff's important, and I feel like most people miss that. It's a very entry-level trading concept, risk reward, profit and loss, where are you putting your stop, multiple time frame analysis is so key, guys, and it frames everything. If I'm taking a long on the 1 hour, but I'm framing my trade on the daily, my stop might be way further away than someone who's, taking trade on the 5-minute chart, but they're framing their trade on the 1 hour. I hope that makes sense. I'll kind of go into it a little bit more as we, get deeper into the charts here. I already have a feeling it's going to be a long video. I apologize in advance. So let's see if I even answered Shad's question here. Hey, Trader Mayne, is this a D1 breaker because it took out stops at 7,200? Is that right? Stops at 7,200. Yes, that is right, and I think that is what I said here. You guys can tell me if I'm wrong. But it is a day one breaker because it is an order block that blew out a swing low here. Exactly. And then didn't get respected on the way back through. That is the key. It doesn't have to, and like this candle nuked it completely, right? This candle nuked it. So the retest and, the reason I framed that long that I posted on Twitter was based on us being above this daily bullish breaker. And the reason this BTC shot caller guy on Twitter says that is this is a very powerful price action move. Breaking of a swing low, and then it gets nuked and it gets retested. That definitely means, in the intermediate term for me, and I said this, above the green zone, I am looking for longs. And I'm bullish, if you want to call it bullish. But in terms of the macro trend, I still think we need to break this high for me to think that we're going to even have a chance to get back into the, 5 digits Bitcoin, and challenge these equal highs, etc. I definitely think it's going to happen eventually. Is this the bottom? And, this is the first higher low. And then there's going to be a higher high here? Fucking maybe. And I'll be ready for that. But the bottom line is, this could top out right here and we could have a lower high right here, right? So it could be a low, a high. Yes, it's a higher low, but a lower high here, and we could continue to bleed out and blow at all these levels. Regardless, I'm going to be ready. But in the medium term, above this green zone, I've said this a bunch of times, I'm looking for some longs. But with that said, above this green zone, we have here a weekly bearish order block. That's this candle here, this up candle before this down move. The down move breaks the low of this candle, breaks this swing low, right? This is a weekly order block. So I just took the body on this one, and someone's going to say, well, oh, you took the wick on the last candle, and why are you only taking the body on this one? Couple of reasons. Look how long this wick is up here, right? If I took the wick to wick, I'm going from 8,000 up to 9,000, let's call it, just for, easy math there. What good to me is $1,000 range when you're trading something like Bitcoin? Like, I need a little bit tighter area of price action, again, within the body of the candles where the majority of the volume occurred. So that is why I drew that there. So we are coming up into resistance here. So keep that clear. On the highest time frame, we're coming into a very significant level. Above this weekly level, very strong chance we're going to see a lot more upside. If we can get above here, retest, and then break this high, I've talked about this since the first trading update I put out. If we break this high, get on top of this level and break this high, we have a serious chance of coming at here. If we get above this high, I'm going to fucking punt a short thinking maybe it's just a fake out before a large move down, because there's a very good chance if we blow this high at 9,200 or 9,100 or whatever you want to call it, everyone's going to be FOMO longing here, which would be a perfect opportunity to bring it up to up around here. I bet you there's an order block in here somewhere I could draw. Let's see, right here, right? Up candle before a down move, breaks this low, breaks this swing low. How nasty would this be? Think like a market maker, guys. Think about how you would get the masses to be 100% wrong. What would you do where everyone would be so sure that Bitcoin is going to the moon, where you could just take them of their money? You got a nice clean double top up here, tons of liquidity up here, tons of liquidity right here, maybe even up here. How nasty would it be to see a break of this significant weekly level, strong bullish move, taking out these highs, taking out the highs just above the order block, everyone FOMOing, and then sell the shit out of it back down to here? You know how much money people would lose because everyone would be long, and they would be sitting there on the way up here, right? We're going to have an up, we're going to have a retest here. What do you think everyone is going to set their stop at? This is all hypothetical, guys. I'm not saying this is what can happen, but in my eyes, the money move to destroy people would be break out this high, break this high, break these highs, right? And fuck people on the way back down. That's the whole market maker perspective, right? They do not want, the 99% is wrong. The market maker, the smart money, whatever you want to call them, they're not going to let the retail trader, the layman, come along for the ride back through 20,000. Some people are going to get there, some people are going to be right, but the majority of people are going to be selling when they should be buying, and vice versa. We've talked about this, right? When the retail person is, when this move is happening, retail is selling, right? That's a smart money buy. Look at the power of that move. Right? The smart money is buying these powerful moves, and vice versa. The big dumps, that's smart money selling and retail's buying. So anyways, I'm digressing here as usual, but imagine a break of this level and a retest. Where is everyone going to set their stops? Right below here? Maybe even down here? How nasty would that be? A break of these highs and then a rip back down through here. So I will definitely short a break of this area. And with risk reward, right? I might be shorting in the face of a massive bullish move, and that sounds stupid, which means it might be right, guys? You got to think of that counterparty logic. Everyone is going to be buying here. I'm going to punt a short because I bet you that they're going to dump it once everyone sees this swing high break and buys the breakout. But I'm going to have a tight risk reward, and that allows me to be wrong. So when I'm doing these counter trend moves and I'm taking a risky trade, to me, the upside is huge. If I get a short up here and I'm targeting down here, let's just show you. And I say, okay, well, if they break this high here, if they break, like, let's say this high, I don't know. And I'm entering on, okay, they broke through this high. And if I think they're there, I'm really wrong. This is a decent trade here, no matter what way you slice it. I mean, you could have the tightest stop. This is a 4 hour, so it's not showing you the best definition, but I could have a very tight stop, sell the fake out of this break high, and target just down here. And I have like a 2-to-1 minimum trade. No matter if I make my stop looser, I can have a 2-to-1 trade if I play it really tight. And I'm allowed to be wrong here, because if I'm wrong, for $100 I'm losing, my potential upside was $300. That's the 3-to-1, right? So risk reward is as important as anything. So that's how I always try and frame my trades in terms of trying to think like the market maker. And so this is going to be a swing high everyone is watching, just like this is a swing high everyone's watching. So a break here, which might happen during the recording of this video, I'm going to sell it. I know other guys are talking about having sells up here, and I imagine it's for that exact same reason. The contrarian thought, everyone's going to buy this breakout, think we're going to 9K. We may very well be going to 9K, but you bet your ass they're going to blow this high out, then dump it down, and then take it to 9K, because they got to fuck the retail out of their position. They got to shake out the weak hands. They got to stop people out. They're going to do stop hunts. And that kind of will lead me into, this trade here. I mean, we can talk about this right now. This was the exact same setup we had down here. Remember, we talked about this in the last video? We had a dump, climax selling here, right? Wyckoff, right? Climax selling here. We had the volume indicator on. This was the max volume, this dump, not this one. So we had a swing low, then we had another dump into a higher time frame level, taking out these stops, then we had a higher low form, and then we just waited. And we entered on a retrace. I think I posted my entry somewhere around here. I could pull the fib for you guys. Right? We entered right around here. This was posted on Twitter, and we nailed this move. And why was this such a good trade? We had the higher time frame analysis done. We saw the fake out, the Wyckoff spring, I think they call it. We had the ICT optimal trade entry in line with an order block right here. This is a down candle. You can barely see it, but this is a down candle. Before an up move, violates the high, breaks out this swing high, and if I draw out this order block, it lines up perfectly with the 79% retracement level, right? You could have also entered this trade here. Would have been fine, any of this. And the reason this is a good trade guide, guys, is look at the upside here, right? We had this void that needed to fill. We had this void that needed to fill. These voids, this void kind of already got filled here, partially. New void created. Void filled, right? So the upside was huge. These stops, we already talked about the short we took here over and over again. All the late bears trying to short the bottom, short here. All their stops are up here, guys, right? Up here even. And what happened? We had the entry, boom, we filled the voids, we cleared out all these stops, and the reason it was a good trade is because my risk was so little. I entered here and I said, okay, well, if it breaks this swing low, I think it's going to go lower, so I want to be out of that trade, right? At $6,400. But my first profit objective on my $6,800 entry was, oh my God, get out of here, was right here, right? 7,200. So my first profit objective was a 1-to-1. The next one was a 2-to-1, 3-to-1. I think I posted this on Twitter. It ended up being like a 5-to-1 RR. So that's how you frame a good trade, right, guys? We had the stop hunt here, stop people out. We had lots of predefined targets on the left to frame our risk reward. We had liquidity to target, voids to target. We had sentiment on Twitter thinking that we were going to dump through here. Remember, this was only last week. It seems like forever ago in crypto land, but it's not. Not that long ago. Everyone was saying, "Oh, we're gonna break through these lows," and what happened? Everyone got smacked in the face. Not us though. We posted this beforehand, and the exact same thing happened here, guys. We had strong move up. We had a low formed, right? Low formed here as well. This is that daily 1-day breaker. We had a swing low, a short here, or excuse me, a dump here. I'll show this on the 1 hour. It looks a little better. This is the exact same pattern I posted here, guys. Swing lows, right? Swing low. What do we see? Stop run, blowing out all of these lows right here, right? And then we had, I showed you that I drew this in advance. I said we're going to have a higher low form. And what do we have on the left? We had voids to fill. We had clear areas of where people's stop would be over swing highs. We had another void more swing highs to target. And my level I had mentioned, I thought that we were going to reach for at the very least was filling in this void at 8,325, and you can see we did exactly that. So I mean, that's the exact same pattern. To me, that's what a fractal price means. You see these patterns over and over again. So here's the exact trade, right? Broke it low. I said we're going to make a higher low, and then we're going to fill this void, clear out these stops, right? It's exactly what we did. I'm not trying to fucking toot my own horn here. I'm just saying that these are the kind of trades you can get when you study price action. Everyone wants to be a day trader. Everyone wants to be trading every single day. You only need one of these a week. Not even. You could get one of these a month if you're doing it properly, depending on the size of your stack, your risk management. And you're laughing. So, I mean, there's tons of these available, not just in Bitcoin, not just in altcoins, but in all markets. This stuff works on all markets, and this stuff's going on all the time. So, was very excited how this trade turned out. This was another one we posted well in advance here. Right? Might put this was April 17th, 7,900. Where's my profit scaling 1? Break of these highs. Profit scaling 2 was at my 8,325 level, and you guys already know how this one played out. Right? Got closer, and then we ended up taking it today. So I still have a long running 1/3 of my position, just seeing what happens, and I'm going to be ready to short, I think, on a potential break of this swing high and expecting some sort of dump afterwards. Jesus Christ, we're already at 36 minutes. Let's get back to the questions here. Do you find using the body in the fib levels rather than the wicks working better in crypto like Forex? It really depends. I mean, if there's a crazy wick like this to here to here, I might use the bodies. The key is that you just have to be consistent. If you're going to use the body on the low, use the body on the high. You got to realize people are looking for the fibs to be this like, okay, well, I got this fib drawn here. I have this low, to this high, and I have a 79% retrace. I have a 70.5 retracement here, so I'm just going to long it. And look what happens. Yeah, you were right for a bit, and then you got smashed, right? There's more than just drawing the fib and being like, okay, there's the retracement, I'm just going to buy it. Or, vice versa, draw the fib, there's the retracement, I'm just going to sell it. Doesn't work like that. It has to be in confluence with other things, with the order blocks, with the higher time frame analysis. Where are you aiming for? Are you looking for a retracement off of a larger swing and a continuation of a larger trend? So the fib alone is not enough. It's a measuring tool. And so with that said, if you're going to use it from here to here, your measurements are going to be slightly different than from here to here, but they're not going to be all that different. That's not something I would get too caught up on. Just be consistent. If you can use the body here, use the body here. If you can use the wick, use the wick. I flip-flop. Sometimes I use the body, sometimes I use the wick. Maybe I'm doing it wrong. Maybe I should be using the body every time. Maybe I should use the wick every time. I don't know. I'm not saying I'm the be-all, end-all, but just over practice, being in the charts, trial and error, I just kind of know for this swing, I'm going to use this body to this body, and I'm going to get a 70.5 retracement here. And see, I was wrong there. Maybe if I use this one here. Regardless, it's just something I do from practice. Whatever I think is going to work on that chart. Or on that swing, I'm going to do it. I don't have any hard and fast rules. It's kind of more like an art in that sense, much like the order blocks. Find what works for you. Copying exactly what I'm going to do does not necessarily mean it's going to work for you. No one that I know is successful at trading by just, copying someone's system verbatim. You got to take things that you like, take things that you don't like, and at the end of the day, you put it together and you make a strategy that works for you. I know a lot of you are working, so looking at executing on a 5-minute chart makes no sense, because you're gonna have to be staring at that fucking thing all day long when you're at work, right? Your boss is gonna probably be getting mad at you. The market and the fractal nature of price that allows you to say, okay, you know what, I'm working all day, so I don't want to have to look at the chart more than one day, one time a day, excuse me. So you can frame your trades based on that. There's so much available once you learn that. Once you say, okay, and so when people are asking for targets and things like that, I always want to know. It's like, okay, well, what are you framing your trade on? Because that's going to determine, okay, a break of this minor level only matters if you're, trading on a 5-minute chart. But if you're saying, okay, I'm taking a short based on this high to this low, and this being a retracement, and I think I posted this on Twitter. I do have a short here, going up to this swing high. If you're taking this short, all of this up price action here means nothing to me because I'm on a larger time frame playing a larger potential swing down. But if I'm staring at a 15-minute chart or 30-minute chart and I'm saying, well, I'm short, I'm going to be freaking out right now because this thing looks like it's going up and it's about to go to the moon and stop me out. But you always have to have your trade framed, on a before you enter it. And then that's going to affect the targets you're targeting. So, these little swing highs that were broken here don't mean shit to me because I'm focused on this swing high on a much higher time frame and this swing low. Anyways, I hope that makes sense. So don't worry too much about the fibs. Just be consistent, find what works for you. Same with the order blocks, right? This is all relative to the time frame you're trading on. It's exactly what I'm talking about here. Swing high on the 5-minute might mean nothing relative to this swing high on the daily. That said, if we're going to break out this swing high on the daily, you're going to see swing highs on the hourly or the 5-minute being broken and higher lows being formed on the way. The trend will be more apparent on the lower time frame if the trend is turning in your direction. So if we're going to break out this swing high, we're going to see bullish price action on the lower time frame first. So we've made a swing low here, but we're on the lower time frame. We've made a swing low and then a higher low, a higher high, and then a higher low, and we're staircasing up on the lower time frame. But on the daily, it's just one up candle, right? That's what fractal price means. That's what fractal means, at least when I talk about it. Hopefully that all makes sense here. So that's also how EMAs work. Moving averages, etc. The smaller the period, the faster it reacts to price, right? So if you have a 50 and a 20, well, the 20 starts pointing upwards sooner than the 50 does. I'm doing motions with my hands here, realizing you guys can't see. Let me just post. Let me just do one here, because fuck it, we're doing it live. Oh my god, this is how inept I am at using indicators. I don't even know how to operate them. Moving average. Okay, we'll do 2. We'll do a 9. And we'll do a 18. So notice how the 9 moving average started aiming down quicker than the 18 did. I should make them different colors so you can tell. Right? See how the 9 is more active and it precedes the 18. That's the same thing as what I'm trying to explain is with fractals. And people say, oh, well, the 9, these crossed. It's like, well, if you're waiting for this to cross to enter your trade, this is why I don't like moving averages. You've missed the trade. The only time I use moving averages is to know that when they're far apart and stacking, it's called, you're in a large trend on the daily. So when these are far apart and moving away from each other on the daily, I know on the lower time frame I should be looking for longs. That's basically the only time I use moving averages. But the fact that the 9, right, starts going up before the 18 is the exact same reason why if we're going to break this 9,200 high, you're going to see bullish price action start on the lower time frame first. I hope that makes sense. Obviously, as usual, feel free to ask more questions in here, #questions, so I can find them. All right. I've talked about order blocks a few times in this video. Hopefully you're starting to understand this is an order block, right? An up candle before a down move. The next, this would not be a good order block. Reason being is this up candle, the low is that this down candle does not violate this low. This would be an order block right here. Up candle before a down move. It's breaking these swing lows. It's a powerful move to the downside. It ended up taking us to 6K actually. And the low of this up candle is violated by the preceding down candle. And so this candle drawn out with a rectangle would be the order block. In this one, I used this high to this low, and I would have drawn it out. And we had a trade I framed on my Twitter of us hitting this low, coming up into this order block, and then we caught a short here. If you've been following me on Twitter that long, you guys can go back and find that. That was posted. So I posted 2 videos on order blocks, Horton. I suggest you watch those. They're 30 minutes each, and it's just me drawing a bunch of order blocks. Hopefully that helps. My suggestion is always, I don't want this group to become, just asking me my thoughts on stuff. I want you guys to send me charts of your thoughts, and then I'll comment. I'll be like, yeah, I think you did that great, or no, here's what I would have done. That's the type of collaboration I'm trying to create. I want us, the value of multiple perspectives is that it allows me to learn more and see things that I might not have seen. If we're all in an echo chamber and thinking the same thing, we're going to become the majority, and we're going to be the ones getting screwed on these trades because we're all doing the same thing. If everyone's long, I want to be short, right? So same idea here. I want multiple perspectives. You don't want an echo chamber. You want people who are thinking with the same type of strategy is fine. And yes, you can have people agreeing with you, but as soon as you're in an echo chamber, which very much happens a lot on Twitter, everyone is, licking each other's ass and, talking about the same, oh yeah, everyone's bullish this or bearish that. Like that's what I hate, and that's when you're going to end up getting screwed by the market maker when you have that echo chamber hive mentality. When we're going up, look for people who are talking about shorts. And see, maybe their analysis is wrong, but have that counterparty there and have no bias. And this is something I was kind of talking to Crypto Trendy about a bit. Shout out to him. And shout out to Crypto Horn Harris as well. He's in the dog pound. He gave me a follow on Twitter, and Crypto Dog retweeted that. That blew up my page a little bit. So thank you guys. But I was talking to Crypto Trendy about cognitive dissonance. What this is, and you'll see this all the time on Twitter, is when people have, it's a psychology term, when people have, a bias in their mind or something that they say, okay, well, I don't know what a terrible example might be, but when someone says, okay, I think Bitcoin is breaking all-time highs, they're subconsciously going to ignore facts, at least the common person, that will point them to anything other than that. And you see that all the time on Twitter. When everyone is bullish on alts, if you post a short on an alt or a short on Bitcoin when everyone's bullish, you're going to get destroyed. And everyone's going to say, no, you're an idiot, you're wrong. That's because you're presenting them with some knowledge that goes against their bias that's predetermined. And this happens in real life all the time. Have you ever tried to argue with someone and you already know that their mind is made up before the argument even starts? There's no point in having the argument because nothing you say is going to change their mind. They've already got this predetermined bias in their mind, and they're going to ignore anything that goes against that. And this works 100% in trading. Look at that, guys. Remember the 8325 level we called, and price is just hanging around there right now on that. There it is. Speak of the devil. That synchronicity right there, guys. Law of attraction. That's for another video. We'll do the galaxy, Fibonacci, law of attraction, Kazanomics, DJ Thistle shit. But cognitive dissonance, you're going to see this all the time on Twitter. People who are bullish are going to ignore facts that are bearish and vice versa. And that's why I want people with different perspectives. I don't want to be in an echo chamber. That's why I follow people who are posting these shit opposite than me, because I want to know and have that information. I want to see both sides of the picture. I want to watch Fox News and CNN, because if you just watch CNN, it's all Trump bashing all day. And if you just watch Fox News, it's all, Trump ass licking all day, right? You need to know both sides of the story and then make your own decision based on the complete information. Anyways, that was very much a rant here. I'm sorry, but cognitive dissonance, shit's real. Oh shit, we lost 45 now. Oh my god, I got to speed this up. We're already at 50 minutes, fellas. Oh, I want hashtag question. There we go. I'm smart. I have a degree. All right. Okay, so I think this was the last one. Fibs. Hedging strategy. Hedging strategy when I'm buying longs from this daily bullish breaker and targeting this high on a smaller time frame, like I've been posting on Twitter. I also posted like a week and a half ago that I got short up here. And so I'm hedging in that I'm playing the market in both directions. If that is the definition of hedging, that's what I'm doing. If that's not what hedging is, then I don't know what hedging is apparently. But that I have shorts and longs open at the same time for trades framed on different time frames. Clearly, we can't have this long in between videos because there's way too much shit. Fractals, hopefully I covered that already. Hopefully I covered your order block question there. Okay, run through LBC chart as an example of hunting gains on coins that have pre-pump history and when to add to these positions. Great question. Okay, why did I buy LBC? This is why I bought LBC. Okay, again, fuck you. Huge pump, back essentially full retrace, and just been accumulating. I ended up buying around here. I think I told you guys. I have some buys at like 7K because I thought this was the next run. I don't trade a ton of altcoins. I'm still not, quite an expert there. I'm much better at reading price action on some of the bigger cap coins like Ethereum and LTC and Ripple and obviously Bitcoin. But I'm getting better at this stuff. The price action works the same. There's just not as much history, but I'm going to learn, and shout out to all you guys who have been helping me and posting your alt calls. Vinici, you've been crushing it lately, posting all those charts. Everyone give him a follow on Twitter. He's been posting all sorts of alt charts with what he's been learning, and this is what I love to see here. Shout out to him. Let's go blow him up. Only 63 followers. That's a joke, but I do believe is at 40 just the other day. I'm giving you love. I'm gonna give you some more love here for my man. But he's posting, he's learning, he's listening, he's watching the videos, he's studying, and then what's he doing? He's getting in the charts and he's fucking applying it himself. He's putting them on. I'm blowing your phone up right now. I hope it's buzzing like crazy and you're out for dinner or something or asleep. But he's learning. He's learning. Look at this. This looks great. Nice and clean charts, stops taken into a higher time frame block. Targeting along. Look who crushed this trade. This is April 17th, 7,900. This is nailed this analysis, dude. This is what I love to see. This is what gets me excited. It shows me that you guys aren't just, listening to what I say and then, asking me questions. You're applying it yourselves. You're hopefully making some money, and you're learning. This is what feels good, is when you make a trade like this on your own analysis. It's the best feeling ever, guys. I promise you. So beyond just listening to me ramble and watching ICT videos on 2x speed, I might add, and reading all this shit, get in the charts. Nothing will replace time in the charts. Everyone is saying, hey, what's the quick way I can, learn about this? What's the quick way I can do this? I've been trading since 2013. That's not that long of a time. I don't even think I'm an expert yet. Not even close. I'm starting to get pretty good. I'm starting to get, a lot of things right. Look at this. Look at this forming right here. What else do we see here, guys? Does this not look like the 50% level of this weekly block? Anyways, I digress. I'm by no means an expert, but the Malcolm Gladwell saying, 10,000 hours. If you want to become a pro at this, how many free throws do you think, Kobe Bryant has shot? How much time do you think, these guys who are crushing it, Crypto Cred, Crypto Dog, these guys spend in the charts? It's a fucking lot. There's no shortcut to this. You have to learn, you have to practice, you have to fuck up, you have to get out there and you have to do it. So shout out for Vinici for not just listening to what I've been saying, but applying it yourself. Anyways, huge digression there as usual. So this is why I bought LBC, right? Full retrace, accumulating. I bought it up through here, and I held it, and I'm still holding. And what I've been doing is buying on the way back down. Once we got back down into this gray zone, I've been buying more just to bring my average buy down. It's called dollar cost averaging. So that's what I've been doing here, buying it. The reason to buy it, right? Full retrace, right? What is my downside? If it goes below this low, 1,000 Satoshi, let's call it, this thing, my investment's fucked anyways, right? But when my upside, if my average buy is 3,000 and my stop, for lack of a better term, is 1,000, but my potential upside is 30,000, you guys do the math, right? That's 10 to 1, right? So I hope it's 10 to 1 or else I'm going to sound stupid. But the bottom line is the upside is huge. So you bet your ass I'm gonna punch some money into this, and that's why I'm not super sold on Ven yet, because I think Ven could come lower. Who knows though? This could be the start of an uptrend. But on this weekly chart, does this huge up move not kind of just look like this before the next dump, right? Does this not just look like this could just turn here and just dump more? Who knows? We'll see. But that's why I bought LBC, because that had completed much more of a full retrace. All these coins Vinici's been pointing out, all these guys saying, alt season's here. Maybe it is, but what they're doing is they're buying coins that have had deep retracements to predefined areas of accumulation. I don't know if I have this is the BitMEX ADA. I think this one's done a really nice retrace. Pretty nice, right? Oh, look at that level I had drawn, hey? Pink. What is that level? I bet you it's like a 4-hour block or something. No time to find. But this had done a pretty nice retrace, right? Huge pump. Huge pump. Cleared this consolidation out. ADA could come down and clear here, right? This could just be a bull trap and it could dump lower, but there's no reason to not take a buy on something that is, clearly had a very long retracement, accumulation, and then, a breakout. I don't like to draw triangles, but the triangles are good for showing price compression. It's a good way, especially when you're learning, to identify accumulation. When the range is getting tighter, that's all it is. Bollinger Bands, same thing. When the Bollinger Bands are squeezing, it's effectively drawing a triangle and seeing price compress into a smaller, tighter area, and then most likely is going to be a breakout. But you need more than that. That's why people are just saying, oh, Bollinger Bands are squeezing, I'm getting long. Well, Bollinger Bands squeezing just implies volatility is coming. It does not tell you if that volatility is going to be the upside or the downside. Same with those triangles. It does not tell you if the breakout is going to be to the high side or the low side. You need to have more than that. You need to frame it on the higher time frame analysis. And on ADA, for example, you would see the Bollinger Bands squeezing here. You would see these triangles forming, showing price compression, but as we know, this has created a huge retracement into a previous area of accumulation and support in here. So very good chance that we're going to see a break to the upside. So it's a pretty safe buy. And again, the downside is low. If it breaks this low of the accumulation here, you want to be out because it's probably going to go down to here. But the upside, if this was the bottom, is huge, right? So let's just draw it. Long position. Say you got in at not even that great of a buy, 2,500. Oh, fuck you. I know you were talking about LBC there, Atlian, but this is the same idea. I'll get back to it. So if it breaks this swing low, I probably want to be out of this trade. But if this is the bottom and the upside is through all-time highs again, just to all-time high, I have an 8 to 1. Right? So, I mean, this is what I mean by, why risk management is so important. Because, yeah, this looks like, maybe I could be fucking wrong. But if I'm wrong, I'm not going to lose that much. And if I'm right, I'm going to fucking win big. And the other fact is I'm not going to just wait for it to go through all-time high. You bet your butt I'm going to fucking take some profit here and see what happens. Maybe, it blows out this high and then it dumps off. Well, at least I've covered some profit. But if it goes through this high, and retests and then continues up, I'm going to buy more. And so for the LBC example, I'll do it here because we're just on this chart. Here's a block that we're in right now. If I was long, and I posted this trade on Twitter. I don't want to digress here, but he did a great post, Crypto Don L here, about these triangles. Couldn't have been, it must have been only yesterday, right? Don't tell me you deleted it, bro. About to give you a shout out. Make me look dumb now. Maybe it was more than a few days ago. All right, I'm gonna give up soon, bro. Well, fuck it. So much for showing you that example. He just did a great example of showing, these triangles that people draw and how it would break to the upside and then the actual move was to the downside, right? Okay, here's an example. This is not the one I was talking about, but breakout trader would put their stop here, right? Price is compressing, break high, they buy it, their stop's down here. What happens? They break high, but it gets crushed through right to their stop. So you got to be careful with these things, right? There's tons of fake outs. But I digress here. So I posted a long on ADA. I took profit up here. And then what do? You wait. And if I'm thinking at the end that this coin is going to break through all-time highs, I'm going to see how it reacts at this block. I've covered in some profits, and I'm going to wait. And I will wait for if it breaks this high, I will wait because you bet if it's going to go through this high, it's going to retest here. And I could add more to my position. And if you just want to hold it and you don't want to take any profit here, you wait until you see if it gets through this high and then you add on the retest here. Hopefully that makes sense. But I'm a big proponent of always paying yourselves. Yeah, maybe I don't get 1,000% gainer from having it from here and holding it all the way to the top. But I have gotten huge wins by selling here. And by selling, I now have more Bitcoin than I did down here. And so when it does come back down, if I want to buy more, I have more buying power. Dollar cost averaging, which is buying, if you bought up here and you want to lower your average cost, you buy on the way down. It works on the other way as well with your profit scaling, right? If you take some profit out and then price comes back, if I take profit out here, and then price comes back down here, I'm going to be able to buy more than I had up here anyways because I'm going to have more Bitcoin and the price is going to be lower. Hopefully that makes sense. I'm going to try and speed up a bit here because, we're already in an hour and I am so sorry. Missed you guys clearly because I'm talking my fucking head off here. I think what we'll have to do is we'll do another video over the next couple of days, maybe this weekend, where I'll break down a chart kind of from absolutely nothing to all marked up because I'm not going to have time to do it in this video. Question: opinion on taking positions in alts instead of BTC small moves based on most all-time high. I mean, this is totally up to you. How do you trade? What is your risk tolerance? For this coin to lose 50% of its value, if you put $1,000 in it at 3K and it goes to 1,500, you've lost $500. That's if I have the same move on Bitcoin to lose half of my investment, it's a way bigger move, right? So this is a much riskier investment in that context. So it depends on a lot of things. I believe in diversifying. Obviously, yeah, the bigger gainers are going to be on altcoins, but you can make a killing trading margin on the volatility that exists in Bitcoin and Litecoin and Ethereum. The higher cap coins got to move farther for you to, see that ridiculous return. But with the bonus of margin, which isn't something I suggest using until you know what you're doing, you can get 100% gain on a Bitcoin move that's only $1,000 because of margin. But of course, you're not going to see a 5,000% gain on Bitcoin unless it's a crazy huge move and you're using crazy margin like you are on altcoins. So I guess diversify, understand that alts are much riskier. I'm not the type of person that's going to put $500,000 or $100,000 in an altcoin. I don't know how much you guys are trading with, but I know people who have put like 100 grand on an altcoin, and like on Ripple, like at $2, and they're hurting right now, dude. They're hurting. I would never put $100,000 on an altcoin. There's just way too much. It's a fucking penny stock, man. From $2 to $1, you've lost half your money. That's absurd to me. And at one point, they were down to a quarter of their money. Crazy. Not my cup of tea. We're sitting around at the 325 level again, guys. That voodoo shit. Anyway, so I would say have a good mix, but buy altcoins that aren't already going straight up. Buy ones that have bottom out and are accumulating and are ready to do a new market cycle. This is a much better buy, in my opinion, than this. Yes, this is going up right now, but to me, this has a lot more room to retrace to the downside. To me, why would the market maker of whatever, whoever's moving this coin right now, why would they have people who got long down at 20 cents still be in this trade and then not even get them in the negative before they blow it through all-time high again? The person who bought LBC down here, I'm telling you, the most of them sold it down when it went even lower. They're like, well, fuck, I'm in the negative. I held this thing. You'll be amazed at how many people will hold a thing all the way through this bull wave and then all the way back down and then sell it down here. Oh my God, if you've held it from here all the way to back down here, you might as well hold it and hope that it fucking has another cycle. That's better off than selling at a loss. Never truly a loss until you actually sell it. So hopefully that answers your question. That's kind of a one that's just kind of up to you. What are your trading goals and your risk tolerance and your things like that. I mean, like I said, if you're just a Bitcoin crypto believer, a lot of these things, a lot of these coins, if they have a good project behind them, I always stress I don't use a ton of fundamental analysis, but the value of a good project and at least good marketing more than anything means that a coin, and we've said this over and over again with Ripple, is likely going to be cycled multiple times because they can use news to inject volatility and they can just continually fuck people out of their money over and over again, as they're doing here with Ripple and have done so several times with lots of these coins. So don't just buy a coin because it's at a floor. There should be more context to it than that, but don't buy coins that are clearly still in a downtrend, in my opinion, versus a coin here that looks like the downtrend is over and this looks much more like disbelief to me than this does on your Wall Street cheat sheet there. But who knows? Anyways, where's the thing here? Why is it not hopping me to the message? Oh boy. All right, hashtag question. I think we're on number 10. Okay. It's doing it again. What the hell is happening here? These must be, I don't know what's going on here, but I'm just going to skip to this one. Question, go through this shit, posted by me. Crypto Ed. I don't know what I was thinking here, but let's just go look at his page. Maybe we're about to roast Crypto Ed, I don't know. All right. 90,000 followers. Sick car. Yeah, I don't really know what I was trying to say with Crypto Ed here. I mean, I'm not a fan of Elliott Wave. I think I've made that abundantly clear. But a lot of the reason I don't like this kind of stuff is because a lot of this looks really good in hindsight, but it's not often very well and very predictive. Like, are you telling me this wedge, you were expecting it to break down here and go up to there? I mean, maybe, so maybe he's right on this call. I don't really know. But not quite sure. Not quite sure what I meant here. I must have been, oof, yeah. Who knows? Could have been high. Could have been high. Pretty late at night there. But I think I don't like Elliott wave. So not something I focus on in my trading. What makes an OB? Hopefully I covered enough of that for you guys to understand. Okay, so this video by Luke Martin, who I think is a good guy. I think he means well, and he posts some useful content. But there was something I think he was saying about buying consolidation above resistance, being a bullish sign. Honestly, again, this must have been late at night and something I don't really know what he's talking about. But no, Luke Martin, I actually don't mind. I think maybe I was just on a little bit of a Twitter spree. All right, here. Question. Would this be considered an ICT breaker on the daily time frame? Yes. That's exactly what it is, right? Block. Violated on the downside. Violated. The bottom of this candle is violated by the down candle to take out a swing low. It's not respected on the way through. When we come back down to it, we should expect a reaction in the opposite way. That's why this one is a bullish breaker, much like the Bitcoin one. This exact setup is basically what happened in Bitcoin. We had a bullish breaker. We had price go down below it. We had price nuke through it. It obviously didn't nuke through it this high on Bitcoin. But then when it comes back down to it, pretty safe buy. And if you would have bought this off the breaker alone, you would have, been sitting pretty. But what I would have done is had this drawn out, and then when price was approaching this, I would be on a smaller time frame. And on the 2 days that price was inside this breaker, on a smaller time frame, you'd be able to find a very nice setup with a retracement that's going to let you get at the best price. So you're not buying up here. You might get one of, that's how you catch these wicks. You buy on a retracement. And I guarantee you, on a lower time frame, you would find a setup much like the one we had on Bitcoin with our, on a lower time frame, you would see this happen. You would see a low form and then a low blown out and then an up move. Right? That's how and we're buying it on a retracement to get a better price. Hopefully that makes sense. How do you determine market structure when it's broken, per my ADA example? Market structure is relative to time frame, right? But market structure being broken is here, right? This high being blown out is market structure breaking. You want to see a new swing high is formed, right? And then that swing high is broken here. And then when this swing high is broken, that will be a break in market structure. And so if I'm looking to buy and play along, that is going to be the break of this high on the hourly, I'm going to go on a lower time frame and look for this swing high on a much lower time frame getting broken, and I'm going to buy a retrace to get in sync with that. Yes, technically this swing low and this going down through it is a break in market structure. This is what ICT calls a Judas swing. This is a stop hunt. This is pure manipulation, right? Because if trading was as simple that okay, when a swing low breaks, you sell it, everyone would be rich. We talk about this all the time, right? If every time a swing high breaks, you buy it and you're going to be right, what happens? No, you're not. You're fucked. And then it turns out you were right, but you got knocked out of your position first. That's what you got to keep in mind. So yes, a break of a level is a break in market structure, but there's more things that go into it than that. Generally, what you'll see is a break in market structure, right? And then you'll see a move the other way getting people who would have bought this breakout stopped out before the actual move. Oftentimes in trading, and as I'm sure as a lot of you guys who are beginners are learning, is you'll think you'll see a trade setup and you'll enter it, and after it's all over, you were right, but you got stopped out before you had a chance to be right. And that's how the market's designed, right? You're always going to be like 100% wrong. Like, you enter a long and the price goes against you instantly. That's how it's designed. It's designed to, mentally, psychologically fuck you. And you see this low break and you go, okay, we're going down. And then, all of a sudden you realize you just got faked out. Why is that? Because this is an hourly swing low. Market structure broke, right? And then it ran up. But on the 4-hour, or I guess the daily would be a better example in this case, right? On the daily, really that whole area of price action, that was all of this chop, right? Where it was like, okay, is this the swing low? Is this the bottom? Is this the bottom? All of this chop, this is the algorithm doing this. These people who set their stops here getting stopped out, all of this chop is really just this swing low forming on the daily. So in reality, on the daily, no swing low was broken on the downside. Why is that? Because the next swing low on the daily is like way down here. Right? So you always got to keep the higher time frame in context. And that's what I mean by price is fractal, right? All of that chop in here, people getting stopped out thinking market structure broke. Well, on the daily, market structure didn't break at all. And as much as on the lower time frame, it looks like we're breaking market structure, like crazy on the upside. On the daily, this swing high is still intact. It might get blown out now, but it's still intact. So market structure is relative. Hopefully that makes sense. Yes, 100% yes. Institutional money is buying around those types of levels. Big money is buying at the opens and closes, and they have orders at, big round numbers, monthly opens, monthly closes, weekly opens and closes. I'm not saying to go mark every open and close on the hourly chart, but on the weekly, maybe on the daily, those are important levels. Order blocks. One thing that people say, oh, order blocks, like orders are just sitting there. Yeah, occasionally and sometimes, yes. But order blocks are areas where institutional money is buying and selling. And it's not just a price level. It's a zone. And that's what you got to realize. And that's why order blocks are useful, right? Like, so when we approach here, I expect there to be institutional sponsorship at this level. Maybe it gets nuked through, but this is a level where the smart money, the market maker, the institutional money has defended and bought and sold and created a position here. A short was created here, right? And so when price comes back to here, I expect them to defend this level. Maybe it is going to go through, but it's not going to go through before they cover all of their position. Hopefully that makes sense. And that's what makes your trading so much easier. If you mark these levels in advance, wait until price approaches them and then look for a setup. Why try and get in a trade here when I can wait for price to come, to here, and I have, a predefined level to look for a setup at. Maybe look for a stop run into this level to sell. Something along those lines. We're going to have to do another video on order blocks and marking up the charts because this one's already going so long. People are saying, oh, okay, when's an order block no longer an order block? An order block, just because price goes through it, does not make it not an order block. A few things are a factor. This is a level where institutional sponsorship has occurred, so we can expect there to be a reaction. It reacted to price here, it caught here, and then it traded through. Just because it's been traded through, is this no longer a valid order block? I don't know. You tell me. What happens? Price comes up, rejected off it perfectly. Rejected off it perfectly. Rejected. And now we might go through it, right? So these are areas where institutional money is either going to be buying or selling. So these are areas we look for a setup. And those are going to be your highest probability setup. The only another factor to consider is recency. Recency matters. Like, yes, an order block here is effective. It catches this low and it caught these lows, right? But recency also matters. You do want to look for more recent stuff, and I only draw levels out that we're trading near. There's no point in me having all these order blocks up here drawn in until we're trading up to them. Keep your charts clean, keep them less busy. It will help you, kind of hopefully see price better. How do you set your target? Using daily, weekly OBs? It depends. Target setting is going to be relative to time frame. If I bought a long down here, I'm going to be targeting swing highs, order blocks, and areas of liquidity on the upside, right? Here's a perfect example. How do I set targets? I bought here. Where am I targeting? These swing highs, because there's stops. I knew there was a void to be filled here. And then I was saying, okay, we'll take some off up here once this void fills. And then I'm letting a portion ride to see if we take out these swing highs. So you look left to target. Look for areas of liquidity. Nice clean double top here. Voids that could be filled. There's an order block here, right? That's stopping price right now. This is an order block happening live, right? Draw that out. Stopping price right now. So what? I think there's going to be potential selling up there. So yeah, that's why I'm taking some profit right here, right at this order block. Taking some profit, but I'm letting the rest ride, targeting these swing highs. So that's how I target. I target old swing highs or swing lows on the reverse side. Voids to be filled. If there's an order block, a high time frame one, like if we're coming up against this weekly, when I was getting long down here, I took some profits here. And then, if I wanted to re-enter, I could re-enter at a better price. But, taking profits here seemed pretty smart, especially when we drop back down and, 8,000 here. So always pay yourself. But yeah, target old swing highs, areas of liquidity, take profit at order blocks, set targets. Fibonacci works great for that as well. Again, Fibonacci is a measuring tool, right? So if I measure this swing, taking profit here makes sense. Taking profit here, the 100% would be a full symmetrical price swing, meaning this distance would be the same as this distance. And where does that take us? Right above this double top here. So the Fibonacci works in confluence with a lot of these, because the markets run mathematically. It's an algorithm, right? Fibonacci calculates and measures waves and moves in the market. So it's not just as simple as pulling a fib and saying, oh, it's going to go up here. Well, why is it going to go up here? Well, it's a 100% symmetrical move from here to here would be equivalent to here, where the 100% on the fib was. And there's liquidity up here. It's also just above an order block. So, I mean, you're going to start piecing all these things together, guys, as you study more. All right. Go over R&R. Hopefully I did that already, right? If I'm entering a trade here, and my risk is, $119, my first profit objective should be at least 240. And that made sense here, right? So that would be a 2-to-1. And then this ended up being like a 3-to-1. And it could be even higher if we break through here. So I always aim for a 2-to-1. If you're aiming for a 2-to-1, you only have to be right like 40% of the time to grow your equity. Sorry, one sec. Someone's just calling me. So I always aim for 2-to-1, and that allows you to be wrong and still grow your equity. You can be wrong, 5 times out of 10 and still, grow your equity. So that I always aim for a 2-to-1. I posted that chart, showing the risk reward and, how many times you have to be right, your winning ratio, and it's pretty high. So 2-to-1 is what I aim for, and I frame that on, okay, where's my stop going to be? Below this swing low, because I think if we break this swing low, we're going to see way more downside. Where am I targeting? Up here and here. And I know these things before I enter the trade, guys. And you should too. Do not enter a trade unless you have predefined profit objectives and stops and, just a strategy. I cannot stress this enough, and that's why that Went series by ICT is so important. Yeah, it's boring, but it's the facts. It's going to tell you risk reward is important. If you want to grow your money, risk reward is almost everything. You can be a pretty shitty trader, but if you have risk reward down, you're going to make money because you don't have to be right all that often. And I say that all the time about myself. I'm not an oracle. I don't know what's going to happen every time. I mean, occasionally I pull calls like this out of my ass where I, call even the bounce and the exact numbers. But the fact of the matter is, because I have good risk reward, all I'm doing is making educated guesses. And if I'm wrong, I'm wrong. But if I'm right, I make more than I lose when I'm wrong. That was a mouthful, but anyways, hopefully that made sense. Basis risk reward management. Go to this picture that I posted in. I've posted this in our group, guys, and I posted this in the dog pound yesterday. Oh my God. Y'all up late. Right here. This is everything. If you aim for a 2-to-1, you only have to be right 33% of the time to break even. 3-to-1, only 25% of the time. So if every trade is a 3-to-1, your potential upside is 300, your loss is 100. You only have to be right 26% of the time to make money. It's insane, right? But if you're only aiming for a 1-to-1, you got to be right half of the time. It's hard to be right half of the time. That's the beautiful thing about trading. You don't have to be right more than half the time to make money if you have smart R&R. Why do order blocks still matter? I hope I kind of talked about it, but hopefully I kind of covered it. Yeah. So this was just an order block that I had a 50% on. But order blocks are areas that price, institutional sponsorship, buying and selling has occurred at that area. Whether or not it's going to happen again, you don't know until it gets there. But these areas, we wait for price to approach, and then we look for setups, and we frame our trade with all the other things we've been talking about. So if they've bought or sold there before, it's likely that they're going to buy and sell there again. But it does not mean it's going to happen every time. An order block can be invalidated by being run through it. You know, if it blew through this order block like it did here, it does not mean that when it comes back up, it's just going to shoot through it. This is an area that they've bought or sold at before, and what do you know? It's an area that they sold at here, and then they started buying at it. So these are the areas where the smart money, the institutional money, the market makers are buying and selling. So these are areas where we want to be buying or selling, or at least looking for our trade setups. Hopefully that makes sense. And one more quick thing about voids. You know, everyone's like, oh, well, what, you know, these voids, why did I want them to be filled? Well, I was looking for a long setup, and these voids were helping me target. I said, okay, well, if we are going to go up from here, this should get filled, and this should get filled. This is a void here. It didn't get filled. Maybe it will get filled way later. Maybe it will never get filled. Maybe Bitcoin's just going to go straight up from here. They do not have to be filled every time. But just like seeing stops above swing highs, voids can be a good area to help you target where price may go. And I'm just trying to wrap this up because we're at 1 hour and 20 minutes. Give us more concepts in the video. Hopefully I talked about a lot of this today, order blocks and shit like that. So clearly we're gonna have to do another video here, guys, soon. And I'll mark up a chart from the bare bones this weekend. I'll give you some analysis on coins. You can let me know what coins you want to see. This was my first video in a while, and I think I may have just blabbered more than I should have, but who knows? You guys seem to like this stuff and like to hear me chat, so hopefully you enjoy this one too. Overall on Bitcoin, real quick here, I said this a bunch of times, above this green zone, I am looking for longs. Above, within this pink zone and slightly above it, I might try and catch a short and get out on a nice little margin trade and a short down into here and a retracement. On the highest, time frame, I still think this high needs to be broken for the daily chart and, the higher time frames to really start looking like, okay, maybe that was the bottom and maybe we are going to start climbing up again. I don't know though. And if that happens, I'll be ready for it. But in the meantime, above this, I'm thinking quite strong bullishly because you know what? This was a huge dump that happened off of this block here. So quite bullish above here. If you want to call it bullish, but if it goes down, don't yell at me because I'm going to be of shorting and I'll have posted why on Twitter. I mean, I'm trying to be transparent as I can with you guys. This I didn't even get to. The black hole that is Twitter or YouTube crypto. Oh my God, it's a shit show. Whoever sent me this, I forget your name. I don't think this guy knows what he's talking about. I'm sorry. I think he's a goof. Just the way he talks and the terminologies he's using makes no sense. Anyways, so yeah, again, this has to break high. I try and remain transparent with you guys. That's what I'm saying. So I try and post everything on here. I admit when I'm wrong. I try and make defined calls when I post shit. I try and say, yeah, this is where I think this is going, and this is why. And I hope that shows you guys that I'm trying to be honest with you and show you that, hey, I'm doing the same thing you're doing. I'm out here trading. I'm punting trades around. I'm making money. I'm losing money. We're all learning here. We're all very early in this crypto game, so nothing to worry about there. But yeah, Bitcoin overall, I'm bullish above this zone for a little more upside. This is the key level to me I'm watching if this macro trend is going to trade. But again, my nasty scenario would be a break of this high and then a dump back down. I still think there's so much pain that could be inflicted by bringing price down here and drawing it out in accumulation. And what I mean by that is everyone on Twitter seems to be happy and making money, and alts are back, and that to me sounds like a perfect opportunity for the market maker to butt fuck everyone on a short. At least that's what I would do if I was making the market, because the Twitter sentiment to me right now is very similar to it as it was here when we bottomed out at 6K and we were approaching 12K again. This is 100% move, right? Everyone was like, oh yeah, that's the bottom. We're going, after we break this level, we're going to 15K. Well, what happened? We got up to 12K and everyone got fucked. And now the sentiment is quite the same. In my opinion, alts were pumping back here too, as it is down here. But this move is not even nearly as strong as this move was. And this sell-off was much stronger than that last one was. So to me, I don't know. This still looks like a lot more powerful selling than it does, retracements to the upside. So overall, I'm still thinking this is a very huge macro downtrend. I think more pain could be inflicted by crushing all of these people who think Bitcoin is bottomed out. But who knows? If this is the bottom, I've got longs ready. I'm already long. I'm holding some alts. And if it's not, I'm going to be ready to short. And you guys will be ready too, because I'll be posting. Anyways, very long video. I'll be trying to do these more regularly. Please, your feedback's appreciated. Maybe we'll try doing some live streaming soon. I'll be dropping the invite link to the Discord tonight. I'll make it one day. We'll see how many people come in, and we'll kind of go from there. And then... yeah, we'll try and do a video this weekend over the coming days, if time permits, and we'll do a full market breakdown where I go through several coins. You guys can go hashtag questions with the coins you want me to draw up, and maybe I'll start with some extra clean charts and do that. As for guys in the pound, again, thanks for having me. Having a lot of fun in there. I'll keep posting. I suggest all my homies join. And I'm going to be putting together some ICT stuff for those that are interested. Seems a lot of people interested in learning about price action. I'll send you all the content I have. Anyways, Trader Man signing off for today, and we'll catch up soon, guys.